I made the conscious decision, not only for logical financial reasons, as I just said, but more as a matter of statement too, to just, I don't even want a dollar right now because I don't agree with the way they're being managed. I don't agree with the future outlook of them and what they stand for. So that was Jan 1. And yeah, like I said, I mean, if Bitcoin is averaging, let's say 50 to 100% year over year over its course against the dollar, then you're talking about living a life where every single year, everything around you gets half off. If you live your life on Bitcoin, everything around you is around half off year over year. Your dream house gets half off. Your groceries are half off. Your gas is half off. And so it's a phenomenal way to store your time and energy.
At the beginning of the year, Strike founder and CEO Jack Mallers announced in a post on social media platform X that he no longer owned US dollars and was all in on Bitcoin. In a thread that now has almost 1 million views and over 12,000 likes, Jack said he decided to go all in on Bitcoin when he realized that central banks would never stop debasing fiat currencies like the dollar, putting the cost of the excessive money printing and overspending on the populace through the massive inflation tax. "I no longer own any US dollars," the Strike CEO wrote, "not even a penny. As an American millennial, I love our country, but I oppose our money. I'm all in on Bitcoin, setting my sails toward prosperity or going down with the ship. I believe it's important to take a stance now more than ever." In 1971, the US abandoned the gold standard and assigned itself as the world reserve currency issuer. It's been a post-industrial economic wasteland ever since. The money printing has created hyper-financialization, hyper-asset inflation, and a disgruntled population. As the US devalues its currency, its citizens are forced to use assets to store their wealth, such as real estate and stocks. This drives the prices of these assets up, also known as asset inflation. The result? A massive wealth gap. Printing money makes those who own assets richer, and those who can't afford them poorer. The massive wealth inequality has become even more pronounced over the past few years, especially since the staggering money printing response to the pandemic. It is estimated that the top 1% only owned about 20% of the world's wealth in the early 70s. Before 2020, that figure had skyrocketed to over 50%. Last year, Oxfam, a global poverty charity, published a report revealing that of the $42 trillion in new wealth created since 2020, $26 trillion, or 63%, went to the top 1%. While the remaining 99% of the global population collected just $16 trillion of new wealth. It's anyone's guess how much of that $16 trillion trickled down to the working class. In his posts, Mallers noted that the story is pretty much the same in the United States. As of 2021, the top 10% held 70% of total US net worth, creating an enormous disgruntled population. "Our money is dividing us," he added. In a recent interview with Daniela Cambone on the ITM TRADING YouTube channel, Mallers talks about the decision to go all in on Bitcoin, the spot Bitcoin ETFs, and how Bitcoin compares to other assets like gold. As we bring clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
So the products that I use to do this, we're actually making public at Strike. So I don't really like pitching Bitcoin with my company because it feels salesman-y. So you got to just take it. This is just how I do it. You guys can do it however you want. But we at Strike offer a real-time, we integrated RTP Fed now. So we have a real-time withdrawal feature, and we have a direct deposit where you can get your paychecks in Bitcoin. So all of my paychecks land in my Strike account as Bitcoin. And then every single month, whenever I need to pay down expenses, then I swap it to dollars. I real-time pay those bills. And so I'm effectively just using Strike as a Bitcoin checking account. And I think it's more than reasonable. I mean, first of all, the best way to achieve this is to live within your means. So if you're spending less than your paycheck, then it's never really a huge issue. The risk is that Bitcoin draws down so much that it depletes your total value, in that you have expenses that exceed that number, right? If Bitcoin goes down 80% and now all of a sudden you don't have enough capital in dollar terms to pay off your expenses. So that's the risk that you need to measure as an adult. But I think it's more than reasonable as long as you live within your means and you have some cushion that is going to cover expenses in some dramatic event, then it's the most logical thing to do is to hoard the money that goes up the most against and borrow the money that goes down the most. And I've done really well. I think when I made this decision was on the first of this year. I think Bitcoin was at like 30K or something. And so everything around me has gotten at least half off.
Oh,
It's a great way to live. You'll never meet a human more long than I am. I mean, it's my business, my assets, everything about me is long Bitcoin. If Bitcoin goes to zero, I don't know what I'm going to do with myself. So that's how long I am. But I made the conscious decision not only for logical financial reasons, as I just said, but more as a matter of statement too, to just, I don't even want a dollar right now because I don't agree with the way they're being managed. I don't agree with the future outlook of them and what they stand for. So that was Jan 1. And yeah, like I said, I mean, if Bitcoin is averaging, let's say 50 to 100% year over year over its course against the dollar, then you're talking about living a life where every single year, everything around you gets half off.
educate me a little bit on how you deal with obviously the swings and volatility that come with being 100% in Bitcoin.
Well, volatility is life. Volatility is a good thing. So first of all, if you were to walk into a building and I were to tell you you have to get to the top floor, but with no volatility, how are you going to go up? You're going to be stuck in the lobby for the rest of your life. And so the idea that we've all been convinced that volatility is bad is the same idea that no one's educated on purchasing power. Volatility is human. Entropy is constant in our world. And so volatility is normal, volatility is expected, and volatility is progress. So I encourage and invite volatility. As far as how do I financially deal with it, I think you have a low time preference and you live within your means, like I said. If you if you don't consume more from the world than you give to it, which is another way of living your life profitably, right? Like Strike is a profitable business. We give more to the world than we consume from it. That's how I think about it.
I
And
like that.
so,
Yeah.
as a human, give more to the world than you consume from it. That way you can
Yeah.
accrue and
Well,
save. And it's very simple from there.
In his posts, Jack noted that exiting the US dollar means taking a stance against funding unnecessary wars, asset inflation that benefits only the rich, and living in a sad, angry, indebted society. He added that he chose Bitcoin because it is the best expression of fiat debasement. Instead of the constant reckless money printing, Bitcoin has a fixed supply that can never be inflated. Jack also noted that Bitcoin symbolizes personal freedom, equal opportunity, a free market economy, innovation, and progress, all of which are values on which the United States was founded. One of the last posts on the thread reads, "Let's look at the numbers. In the last 5 years, if you saved in dollars, housing got 60% more expensive. Oil got 59% more expensive. Food got 29% more expensive. However, if you saved in Bitcoin, housing got 81% cheaper. Oil got 79% cheaper. Food got 83% cheaper." During his conversation with Daniela, the duo discussed the spot Bitcoin ETFs, the potential for centralization risks, and why Bitcoin remains the world's hardest asset, completely incomparable to other assets like gold. Here are more clips from the interview.
I think gold, unfortunately, and we can get into the Bitcoin gold debate, but I think gold concentrates, which is just an unfortunate property of the metal itself. Bitcoin doesn't. In fact, there's an all-time low of physical Bitcoin on exchanges today, which implies that they're being custodied by the individuals. Like the fact that I can put a physical Bitcoin in my brain is a technological innovation. I can't put a gold bar in my brain. When I put it through my ear or through my mouth, right? And so I don't think that the risk of Bitcoin concentrating is near what it was with gold. I also think because Satoshi released it on a mailing list and walked away is the fact that it's so well distributed already through the people. If Satoshi took it to Goldman Sachs and listed it on a public exchange, I think that it would be concentrated, but Satoshi did not do that. And so I think it's nearly impossible for someone like BlackRock or someone like Michael Saylor to achieve a position that's big enough to concentrate Bitcoin. So I don't see it as a risk in that standpoint. I do see it as a risk in that it's still a financial instrument that's within the existing old school financial system, right? You don't actually own Bitcoin. You own Larry Fink's security that represents Bitcoin. And so I think those are two entirely different assets, and you're sacrificing a lot of the benefit of owning Bitcoin for the convenience of the ETF. So that I think there's risk for those that are opting to own an ETF as opposed to the physical Bitcoin, but maybe they've evaluated those trade-offs and those trade-offs are beneficial for them. But on net, I think it's a phenomenal thing for the industry because Bitcoin's this permissionless system. Everyone has a right to do whatever they want with it. The rules are set in stone. No one can change them, and they are what they are. And so people can do whatever they want. And I think it's great that banks and Wall Street are on the same team as me. It's very telling as to where the global macro environment is right now. Again, I love this idea of money is our time and energy in an abstracted form. Whether you mow lawns or you're an accountant or you're the CEO of Strike, you spend your time and energy, and in return for that, you get money. So what does that money need to do? It needs to do two things. You need to be able to save it through time, and you need to be able to exchange it and move it in what we call traditionally through space. So how easy is it for me to exchange and move my money? And how easy is it for me to save and persist my money through time? So for example, if I were to work as the CEO of Strike and get compensated in barrels of wheat, my money would be expired next week, so I wouldn't be able to save it. And if I wanted to send that wheat to Europe, it'd be very difficult for me to do that. So it's not good at exchanging and moving through space, and it's not good at saving and moving through time. Okay, let's look at gold. Gold, under the best circumstances, is 2% inflation. That means gold has a half-life of around 30 years. And through the life expectancy of an American like me, around 70 years, over half of my wealth is gone with 2% inflation. So that's it saving through time. Now, moving it through space, how easy is it for me to say, oh, I would like some of my gold to be in France tomorrow? Not easy at all. How easy is it for me to even store $1 billion or $1 million worth of gold? Not easy at all. So I think for that reason, gold is not an amazing money. I think it's the best commodity, which at the time, sometime in human history was probably a really good money, but not today. Because if you look at Bitcoin, Bitcoin has an inflation rate of 0. So how much better is an inflation rate of 0 than 2%? A million times better. Bitcoin's half-life in worst case scenario is like billions of years, but practically speaking, according to math, it's infinity, right? My money is never being debased ever. And how easy is it for me to move some of my Bitcoin from Chicago to France by tomorrow? In fact, I can get it there in less than 10 seconds and at a fraction of a cost. So it's better to travel through space and time, which are the properties that, I want my time and energy to have. And so I just never understood the gold pitch. It's defective money according to the properties of what I want my money to do.
Over the past few years, the clamor for a sound money system has grown. A system that will ensure an equal distribution of wealth, giving everyone the same opportunity to grow based on their efforts and not based on a system that is specifically designed to unduly reward a small part of the global population to the detriment of others. A sound money system, especially one centered around a digital currency built on the most powerful network in the world, will help us permanently and safely move away from the current centralized system into a decentralized system that treats everyone and every country fairly based on their inputs and efforts. What are your thoughts on Jack's $1 million Bitcoin price prediction and his decision to completely exit the US dollar? Please share your thoughts, comments, and observations in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on the notifications bell so you never miss any of our videos featuring insightful analysis and interviews from the industry's brightest minds. Thanks for watching.